Legends. I see Rich the Legends there. How you doing, Rich? All right. Welcome, Legends, to the Daily Buyer Show. We dig all markets as they relate to crypto. Want to remind you that this is not financial advice. This is just my view of the markets for educational purposes only. But welcome. It is the 15th of December here in Australia. It is the 14th, probably where you are. Sunday night. I know for Rich the Legend, it's just after midnight. So let's get into it. So we've just had the weekly close for Bitcoin, and if you Legends remember, over the past weeks, I've been discussing this inside-outside candle pattern that's been printed, and what it means in context for where we are right now for Bitcoin and for crypto. There he is. Welcome, Kotster. Hope you're well, Legend. So this inside-outside pattern we've been discussing, leading into FOMC, leading into QE starting, QT ending, all of those speculated liquidity catalysts. In context, this pattern was something we were observing closely, because what we wanted to see is if after the outside bar printed last week, if buyers or sellers were going to step in and take control of the market, and if the market was going to show its hand. Now, if you remember from last stream 2 days ago, we were talking about the fact that the last week's high has already been swept, okay? And if it closed bearish, meaning it swept and we closed under the sweep, this is a bearish close. And this to me now suggests that the buyers had an attempt at pushing the market up, yet there's not enough demand. There's no follow through. So when we layer in the context there, right? The fact that we had these liquidity signals that we were tracking, or the speculations we were tracking around QT ending, and then I'm sure you Legends all remember throughout the week, we've had many people raving on about QE starting. There's been big debate around that, okay? And the TGA, so the government switching from refilling their wallet to spending, as well as rate cut. Well, rate cut's done, QT's ended. We had our first balance sheet read last week, and what did we see? We saw, as expected, flattening, right? Like a slight move in the balance sheet. Okay, now I understand that these things will take time, especially when it comes to the balance sheet and the TGA moving and its impact into markets. However, we just got to be balanced in our approach, right? Bitcoin has already given us the big macro signal in turning bearish in the way that it's turned bearish. So if we just remember that historically, when we look at our dashboard here, so this dashboard is Bitcoin, RTY, NVIDIA, NDX, SPX, okay? And if you guys remember, I talk about this dashboard because what this captures is our read on risk markets. Because if you're purely just looking at the SPX and the NDX and thinking that, okay, it's charging higher, it's trending higher, Bitcoin's going to catch up, well, you're going to be caught majorly off-footed or off balance, right? Because the NDX and the SPX top after Bitcoin. So Bitcoin always tops earlier than the SPX and the NDX. And that's just the nature of how capital flows through markets. The riskiest stuff is going to get dumped first when risk appetite is leaving, right? And that's just what we've been seeing. Risk appetite has been leaving, and we've seen Bitcoin, our earliest signal on global liquidity. So typically if participants are expecting expanding liquidity, we'll see Bitcoin respond. And when participants are expecting liquidity concerns or contracting liquidity, then Bitcoin is usually the first to sell off. And we saw it here in 2021, right? You've got Bitcoin that starts topping and distributing here, okay, in March, final top in November. And if you were just blindly chasing the SPX and the NDX going, okay, Bitcoin's just got to catch up, well, you would have just been trying to long this thing into what was a distribution to a bear market. Okay, even if you go back here to 2017, same story. Bitcoin tops here in December 2017, and the NDX and the SPX don't top till the 25th of September in 2018. If you were longing Bitcoin going, okay, well, it's just got to catch up, right? It's just lagging. You would have been buying a bear market. You would have been logging a bear market, and you would have been in for a big surprise come November 2018 when the other markets finally crashed. Hence, we observe the Bitcoin, RTY, Nvidia, because especially coming into tops, you see the fragmentation in the liquidity, because what you'll often see is they'll start to diverge. You'll see Bitcoin topping the earliest, then the RTY will start to, usually about 30 to 90 days will start topping before the others. And Nvidia will start diverging bearishly from the SPX early. Okay, so we've already got the major turn in Bitcoin. The RTY is still on notice, right? So we saw it just poke through the all-time high, and it's been rejected so far. We're going to be watching this week. Nvidia's already giving those bearish divergences, okay, from the SPX. Not fully confirmed yet, because it's not the major divergence like we've seen in the past, but early signs of weakness. So all of this spells to us that risk appetite is not growing, right? It's retreating, okay? And when we layer that in with the current environment that we have, where net liquidity has been declining, okay? We're in a high rate environment. So the rates, the US interest rates are very elevated compared to historical levels. We just had a rate cut, which, as I was saying, is only going to bring rates down to here. And at the current trajectory, we don't have any more rate cuts. The market is not even anticipating any more rate cuts till April, right? So not a low rate environment, and not clear expanding liquidity where the Fed is increasing its balance sheet. Okay, so when you put all these things together, it paints a pretty clear picture, right? It paints a clear picture where these aren't the conditions for new parabolas and new price discoveries. And it isn't a time, and now I'm specifically talking about crypto and Bitcoin, this isn't a time where it pays to be a bull, and it doesn't pay to be, call it, what's the term, like stupidly bullish, right? Like, or eagerly bullish, or it doesn't pay to front run any potential liquidity speculations or narrative speculations, as it does when we're on this side of the curve. So if you picture a V curve, right, and you use the bands for context, okay, we're now on the other side of this curve. We're on the right side of the curve to the downside, where we're underneath these weekly bands. The bands have confirmed bearish, so they've flipped red. Okay, so here you can be stupidly bullish, right, and the market can still buy you out, right? Worst case scenario, you're just going to be holding for longer. So if you were stupidly bullish into here and you were buying some type of low time frame pullback, well, because you are still on the correct side of the trend, all you had to do was hold for long enough, and many conditions were still in your favor. So you could still be stupidly bullish here. And I say stupidly because you could have just been chasing the market, and it's a bull market, sure. Okay, it's more forgiving, but you can't employ that same tactic or mindset when we have such a significant change in the conditions of the market, as well as the price action giving us big shifting structures that don't usually shift unless there's a major trend change. Okay, so again, if you recall from my last stream, you want to be bullish in a bull market when there's a clear trend like this, okay? As can be seen here, it's a clear trend, right? You want to be bearish in a bear market, okay, when you can see clear downtrend. So it pays to be a bear here. It pays to be a bull here. It's more forgiving to be a bull here. So if you FOMO into the market on the long side, the market is more forgiving, and it's more forgiving to be a bear here, where if you FOMO into shorts on this side, it's the market will be more forgiving, right? Because you're on the right side of the trend. Now, where you have to be particularly careful and where a lot of people get chopped up is when you put this transition together. Okay, so this phase from here to reversing this point in time is where the V is coming in. See it here? The V is coming in. So this is the transitional phase where it doesn't pay to be a bull and it doesn't pay to be a bear yet. Okay, once we're beyond this level, right, and we've started to create consecutive legs of structure to confirm that we've shifted into the bearish, that's when it will start paying to be more aligned, okay, to that side. So I said last week that it doesn't pay to be a bull, right? We're coming, because if we just map out the structure here, okay, we had high, whoops, wrong thing here. So we had, that was the high, that was the last higher low for the weekly bullish structure. We came up, swept the last high here, right? And then we had the shift, okay? And now this is such a strong shift. This isn't a weak, you know, sweep. Like, we did have this initial sweep, but we pretty immediately got follow through. We only had 1 week of pause, pretty much 1 to 2 weeks of pause, and we got follow through, right? So here, okay, so if we see this as our bullish side, we've got the top of the V coming in here, right? And we've just taken this structure low here. Well, when it pays to be bullish is once this pullback confirms and we start heading in this direction again, because now we're starting to have these second legs of structure where it starts paying to follow the trend down. But this first shift in the structure is always the hardest, because typically what happens is if we go bullish like this, right, what you might find is the first one comes down. Now, what we can actually increase probability onto the bearish side is the fact that this is such a strong push down. But in this example, sometimes what happens is you just get a move that confirms but isn't that strong and ends up just being some type of deviation before it continues up. Now, considering that we've got such a strong shift, right? So I'll just clean this up again. Considering that this was the low here and we've had such a strong shift, we can be more aggressively bearish. And I've been saying this for the past few weeks. So whilst I've been saying that we do have the catalysts for a counter trend rally, those are speculated catalysts, and you would have known that I've been specifically saying that at this phase of the market, given this context, it doesn't pay to try to front run the liquidity catalysts, right? What we should be doing is waiting for the liquidity to show up and then waiting for price action to confirm what we're seeing in the liquidity, because ultimately we trade price action, and price action will confirm or reject what we're seeing in the macro. Okay, so when it confirms what we're seeing, that's when it's time to step in and start trading with our in the direction of our bias and our analysis. Now, we've swept the high. Okay, coming back to this now, we discussed the fact that I said if we sweep last week's high, given the inside-outside pattern, I broke it all down on my X. So if you're not following me on X, just jump on there and you'll see this post. It's pretty recent. Now, I said last week, if this ends up being a sweep of the high, we've got to consider that since this weekly structure shifted, we haven't yet created the next weekly lower high. Okay, so if this is going to continue down, it needs to create a weekly lower high and then go for continuation. So now, considering some of these signals, considering that we've had 2 bullish candles consecutive, for me, this starts to validate this high as it's turning over as a potential continuation high. meaning it may be coming back down to here or potentially at least down to here. Now, I don't know exactly where it goes, right? I just trade the signals and read the market day by day to see and just create probabilities of outcomes, right? And so I don't know, really, I'd been looking for a deeper pullback, right? Retracement. I was looking for up into these gaps, up into these bands. So because we're not getting that deeper pullback, I think that this sweep could just still be somewhat of a chop range where maybe we just come back down to here or into these lows, right? And then down to here, and then we might come back up to create the bigger, maybe there is still the bigger counter trend rally, okay? And then we come down for continuation. I don't know, but these are the different scenarios I'm preparing for. But in the short term, sorry, I'm just drawing all over the screen. I want to delete this, right? In the short term, I am now leaning bearish, okay? And I'm not interested in any type of longs here. The only scenarios, so where I'm drawing my line in the sand right now is, I'll just flick to the other chart. Okay, you guys have seen this chart a few times. So this is my kind of my high time frame levels and structure chart, okay, where this is the current weekly high, this is the current daily high. So structure cannot be bullish. Like, you cannot be bullish from a market structure perspective unless we at least get above this yellow high here, okay? And that would just mean that the daily's bullish, okay? But the weekly would still be bearish. Hence, I created this major flip zone, which has our weekly fair value gap as well as the bands. Now, you know, I've explained many times in the past why I look at the weekly fair value gap and the bands. So I'll encourage you to go back to any of my last few streams where I explained it in detail. Along with, on my channel, there's a building block series, and if you look at the reading order flow through fair value gaps, I break it down with Bitcoin and how I actually read who's in control of the market through the fair value gap. So I won't break that down right now, but that all contributes to my major flip zone. Okay, so I was looking for something deeper into here to short down to at least here for the continuation. But now that we've got the weekly sweep, it just tells me Bitcoin may be weaker than I even anticipated, right? So this might be it, and this could still come down here or here. This is perfectly valid now as a high if Bitcoin wants to go into continuation, right? Because you got to remember that the macro trend is bearish, so the next weekly structure that's anticipated is a lower high to go low. Now, just going back to this other chart here. Now, in the last stream, we painted the FOMC day, so the day that FOMC happened. Okay, we painted that on quite a few different charts. And the reason we put this on the chart here is the logic behind that and the positioning theory behind that is when the Fed cuts rates, they're trying to stimulate participants to take on risk, right? So by putting this level here, when they do a cut, you'd expect that price should respond, risk market should respond positively, okay? And that means that the risk markets, the risk participants are happy with the potential liquidity trajectory, right? So they're happy to take on risk. Now, if you get, for example, in this scenario, you get a cut that happened on this day, and price is just rejecting and moving away from it, well, that's just telling you that even despite the Fed loosening, attempting to loosen liquidity conditions and potentially trying to stimulate more risk into markets, this is the participants telling you that it's not enough, okay? So it's likely that unless we reclaim this FOMC level, That's how I'm drawing my line in the sand here on the short term to say in the next few days or this week, if we start trading above here in this week, well, then I might be more interested in looking at this potential range, okay, to play with. However, if we're not trading above this level within this week and over this week, I'll be looking for shorts actively. And this essentially is becoming my area of interest where I'm looking for my setups. Okay, and that just gives me, in my positioning strategy on the short term, a very easy line in the sand. So below FOMC, I'm going to keep looking for shorts down, right? And if we're getting above and we're reclaiming FOMC, I won't be jumping into longs. I'll need to assess price as it develops, because given the context, given the structure, I'm more hesitant into longs, right? So I'll need to see a lot of very specific things. And obviously, if you're here with me on this channel, I'm here every day at this time. We'll be analyzing it together, and I'll be telling you exactly what I'm thinking. But that's my short-term line in the sand. If we can't recover the FOMC level, there's no point being bullish, because that's market participants telling you that even with a rate cut, it's not enough to stimulate them into the markets and take on risk, right? So the only other way that I would get bullish on this chart now, or not even get bullish, actually, that's the wrong word. The only other long setup that I might be interested in is some type of weekly sweep setup down here, okay? Because again, if you've been with me here like the legend Rich has for a while, he knows I love to see sweeps, and I look for sweeps because that tells me it's failure of one side of the market. Either it's failure of one side of the market to push lower, or the other side of the market is just taking control, right? So I'll be looking for, the only other long setup that I'd be interested in is if we're down here, sweeping down here, and then turning over some structure on the lower time frames, because that would suggest to me that, cool, this is more likely becoming some type of local bottom to potentially have some rally like this, you know, up here into another macro bearish continuation sort of thing. But again, like, as long as you're here with me on the channel, we'll break it down as we go, right? Right now, if you're looking at Bitcoin, right? So we've got the weekly, we've got the last week confirmed as a sweep. So hence we have weekly structures bearish, weekly bands are bearish, okay? And the bands don't cross unless we're in a bear market, right? So weekly bands are bearish, weekly structures bearish, daily structures bearish, right? Daily structures bearish, so last highs here, okay? This is internal price action. I call this a complex pullback, okay? Go onto my building block series and look for primary versus internal structures and look for complex pullbacks, the videos on that, and I explain what it means when a complex pullback happens and what things to be looking for. Right, so, but this is basically the daily structure. So we got daily structure bearish, weekly structures bearish, and now we're also getting the signals on momentum loss, right, and failure for the bulls to step in and take any type of control over the market, right? So we've had 2 weeks of them attempt to push market higher, and they could barely make any new weekly highs. Okay, so this sweep, there's my context I just laid out for you for me to start looking for shorts. Because now, at the very least, we could be putting in the new daily, the last daily highs here, right? This could be now the new daily high to at least come down here or lower, as well as this could be the turn now, because this validates as the weekly high. So hence, I want to be aligned with that type of trade to get lower, at least into the lows. So that's what I'm going to be looking for this week. And that's kind of the level of detail. Like I've kind of said on this channel, I'm not really going to be sharing exact entries and all that sort of stuff, because I'm just trying to guide you guys on how I'm approaching the bigger macro trends and just being positioned on the right side of the market and those bigger swing trades. And I think this is the time to be looking for now, based on what I just told you, right? That bigger daily, that next daily high that's coming in to go lower, that's potentially also the weekly, right? Now, like I said to you, key area of interest for me is one, that FOMC level, right? Because we've laid the context around that level. Okay, so, you know, this is the market rejecting risk appetite, because even with Fed stimulating, right, if we're not above, means we don't want to take on the risk still. And that's where, for me personally, I come into the 4 hour and I go, cool, like, look at all this chop. Where's the liquidity in the chart? Again, like, I like to look for sweeps, right, to show me that at least one side of the market's taking control or completely exhausted. So, you know, right into these FOMC levels, I'm looking at these 4 hour highs, potentially sweeping into. So around this range is where I'll be looking to get to participate. Okay, so that's my take on Bitcoin right now. I wanted to just open this week going through that, because that's the most important thing we've been tracking right now, is the price action and the inside-outside pattern, and how it relates, how the recent catalysts relate to Bitcoin, digesting the FOMC, etc. And especially, so now you just know and have some clear sort of bias, directional bias on how I'm going to be, what I would need at a minimum to be bullish versus where I'm looking to continue the trade now to be bearish, right? I'm in the process of writing up my weekly market update for Substack. So again, if you're not following me on X already, please follow me there. And that's actually where I will post my Substack soon as it's done. It'll go out there. Quick round the grounds on a few other important charts to be tracking right now. Our favorite chart, stablecoin dominance, and I'm seeing people on X already jumping in, calling, you know, saying things like everyone's become bearish, so it's time to bid. I'm seeing that kind of sentiment on X, and people already putting in their stink bids back down at these these Bitcoin lows here, putting in their stink bids, you know, because they think, oh, if the market capitulates, that's going to be it. They just need to look at this stablecoin dominance chart. Like, this chart has barely, in this range, this is the same time frame of this Bitcoin price. Look at this, right? Okay, sorry, made that a bit of a mess there. Just look at this, right? In these 3 candles here, I'll make it even easier, because then I'll throw on candles on this chart. Candles, right? Now just look at this. In these 3 candles, you've had this price action, okay? And I've seen people saying that they're putting their stink bids down here just in case you get a capitulation down into here, right? This chart can move up so much more. If this moves up like this, do you think that's just going to be a capitulation into these lows? Given the fact that just this range alone has been this entire range. If this moves up like this, if we're trending above here, there's no way that these are going to be the lows. because this is all the liquidity getting pulled out of the tokens. So just keep this chart in mind, legends. Don't get fooled by a lot of the takes that are on X, okay? Because X is just a culmination of emotions getting written down and posted onto the platform, right? Stick to the charts, and this is just a very important chart to watch, because believe me, if we start heading up here, right, we can go much lower on Bitcoin and especially altcoins, okay? if we do start turning over, right, and start heading back down here, that again would potentially give us some internal crypto liquidity, right? And that supports the counter trend rally. But you've got to be just watching this chart right now, because if you're in that camp where you're just trying to work out, even if you're just trying to prepare yourself to buy the next bear market, right? So if you want to be positioning, you know, like back down here when we were positioning, right? If you were positioning into this phase, okay, and you're just trying to work out like, oh, how low can Bitcoin go? When should I buy this thing? Sometimes Bitcoin's not the chart alone to look at, because you're just forecasting things out of thin air. You got to look at charts like USD, like stablecoin dominance, right? Because here, for example, this would have told you, and this was one of the charts I used to buy the bottom, right? To buy, well, not the exact bottom, but when I got my transition all through here, right? That's when I was buying Bitcoin. And it's partly because of this chart, right? And again, if you're just using a simple system, like I use these weekly bands, I give them away for free. Just DM me on X. They're just a 1221 EMA. And I just wrote some, well, I didn't even write it. ChatGPT wrote me a Pine script to make them change colors, right? You can use a simple system like this. And I've just back tested this on the weekly. And these are the charts that directly relate to the price action moves in things like Bitcoin and crypto. So you'd be looking at your price action, and you're looking at how Bitcoin's creating its structures, and if it's starting to shift its structures, and at the same time you're getting these signals in stablecoin dominance where these structures are also turning over to show you that capital's moving in versus moving out, right? So if you were back here, look at this when it crossed, this was January 2023 when the bands crossed. So even if you were afraid that this wasn't this was a fake out and it was just a first cross and it was going to come back up, and you took this range low here and you said, okay, I'm going to wait till this confirms through here, you still would have been buying March and April 2023, and you had a hell of a run, right? That's still here, March, April 2023. Say worst case you bought the top here of the top of April and you were selling it through here, you still made your 3.5x or 250%, right? So hence, this is why I'm constantly referring to this chart now and just telling you guys, like, don't be too eager to jump back into the market before the right signals have surfaced. Because again, just coming back to my original message when we started this stream, it doesn't pay to be a bull yet, and it doesn't pay to be a bear just yet. I believe it is going to pay to be a bear very, very soon. And what I mean by pay to be a bear, I mean like in the sense of the market's going to be a lot more forgiving for you during those phases. If you don't get your entries wrong, or if you're a newer trader or you're not that good of a trader, then the market's a lot more forgiving if you just time those macro phases correctly, because the market will eventually buy you out as long as you're on the right side of the macro trend. Okay, so hence, just coming back to this, this is the chart that you need to be looking at, because if you're just thinking, all right, we're going to be buying the bottom now, what you're expecting is the chart's going to turn over, and then what's the probability of this? Like, because best case, we haven't even created enough internal crypto liquidity yet, in my opinion, to drive the end of a bear market into a massive new bull market, right? If we're just going to move from here to here. And what's the probability of this multi-cycle trend line breaking down? I'd have it at a lower probability, given the fact that, we haven't broken it pretty much since 2019 inception on stablecoins, right? So I think as crypto goes, this trend line is still going to be somewhat prevalent, because as crypto grows and as market caps grows and as people adopt more stablecoin use, even just in as a utility, right? This multi-cycle trend line will probably continue its rise And then this will probably, I don't know, I'm just speculating, but it'll probably, like, if we build up to here, this is where, if I start seeing it turn over, we start to get the band signals, that's where I'm more interested in a meaningful position, into bigger positioning with bigger allocation of capital, because look how much room we've got to move back down, at least into the trend line, right? Whereas here, you know, unless we got a massive external liquidity bid come through, even if we get something down into here, I don't know if that's price discovery parabola-like behavior, especially across broadly the crypto market. All right, legends. Well, I think we'll call it there. The main thing I just wanted to cover today was Bitcoin and stablecoin. These are the most important two charts. Tomorrow we'll have our first, in tomorrow's session, we'll have our first day of trading for the week. Wall Street will have closed for its first day. So we'll be able to break that all down in detail. Just keep an eye on the Dexy. Keep an eye on the Dexy, watch my previous streams if you're wondering why, or just read my Substack. Keep an eye on the Dexy. Let's keep an eye on the major indices. We got the Bank of Japan this week. That's probably the most impactful macro event this week, but we'll talk about it more as the week unfolds. Legends, hope you have a good one. Rich, have a good sleep, Ledge. And we'll catch you tomorrow on the next one. See you, legends.